good condition. My name is Sarah Madani from Group 1 in Taxation subject, and I'd like to share you the history of taxation in Indonesia. So if we're talking about taxation, it feels incomplete if we're just talking about the definition, the function, the type of the taxation. We have to know the history about the taxation itself. So tax is one of the important component in a nation. Tax is the main source income in a nation, including Indonesia. So nation income from tax is divided into 7 sectors. Those are income tax, value-added tax, sales tax on luxury goods, building and land tax, export and import tax, and the last is custom tax. Actually, in Indonesia, we have known about taxation before Dutch enter and colonize Indonesia. At the time, we call tax with upeti. So upeti itself is a tax that citizens should pay for their personal interest and for the operational of the kingdom. For example, for building a palace or for supporting the financial of the kingdom. When the Dutch enter and colonize Indonesia, that's the first time we know about taxation modern system. At the time, Dutch government differentiate the tax rate based on the nationality of the taxpayer. In 1885, the Dutch government imposed an increase for tax residents for Asian citizens to 4%. There was a negative impact as a result of the imposition taxes in the colonial era and the previous era, which just makes some people think tax is only a form of a superiority of the government to their citizens. Because at the time, all the taxation collection system is done manually and without supervision. This is sometimes become because of the tax collection fraud until now. Alright, that's all for me. The definition and function of the taxation will be explained by Felia.
What is tax? Before we jump to the definition of tax, I believe you guys have heard about tax. When we buy food at a restaurant, we buy daily thing at a supermarket, we always pay a tax that have been included in our bill. Tax in Indonesia itself is regulated in Law Number 28 of 2007 concerning General Provision and Taxation Procedures, or UU Nomor 28 Tahun 2007 tentang Ketentuan Umum dan Tata Cara Perpajakan. It is written that pajak adalah kontribusi wajib kepada negara yang terutang oleh orang pribadi atau badan yang bersifat memaksa berdasarkan undang-undang dengan tidak mendapatkan imbalan secara langsung dan digunakan untuk keperluan negara bagi sebesar-besarnya kemakmuran rakyat. Based on that definition, the characteristic of tax are collected based on or with the provision of the law and its implementing regulation. 2. In paying taxes, the government cannot show any individual contra-achievements. 3. Taxes are levied by the state, both central and local government. 4. Taxes are intended for the government expenditures which, if there is a surplus of income, are used to finance public investment. The last, tax can also have a purpose other than budgetary, namely regulators. There are 2 tax functions, namely the function of budgetary or source of the state finance and the function of regulating. Tax have a budgetary function, meaning that tax are one of source of government revenue to finance expenditures, both routine and development. As a result of state finance, the government tries to put as much money as possible into the state treasury. These efforts are carried by means of effects and intensification of tax collection through improving regulation for various types of tax such as pajak penghasilan or PPH, pajak pertambahan nilai which is PPN, sales tax on luxury goods, pajak penjualan atas barang mewah PPNBM, pajak bumi dan bangunan which is PBB, and etc. A tax regulator has a regulatory function too, meaning that tax is a tool to regulate or implement government policy in the social and economic field and achieve certain goals outside the financial sector. There are some examples of the application of tax as a regulatory function. First, sales tax on luxury goods is due at the time of sales and purchase of goods classified as a luxury goods. The more luxury item, the higher rate, so the item is more expensive than people do not compete to consume luxury goods or they will reduce their luxury lifestyle. Second, progressive tax rates are imposed on income entered, so the parties who earn high incomes contribute pay high taxes, so the income distribution. Third, the export tax rate of 0% is intended to encourage entrepreneurs to export their products to the world market, thereby increasing the country's foreign exchange. Fourth, income tax is imposed on the delivery of certain industrial products such as cement industry, paper industry, steel industry, and others. It is intended that there is an emphasis on industrial production because it can disturb the environment and the health. Fifth, the use of 1% tax is final for business activity and certain business circulation. Limits are intended to simplify the tax calculation. The last one is the implementation of the tax holiday is intended to attract foreign investors to invest in Indonesia.
Hi, I'm Sergio Shopping. I'm going to share to you about the tax collection system. So, let's get started. The tax collection system. The tax collection system is a mechanism used to calculate the amount of the tax that must be paid by the taxpayers to the state. In Indonesia, there are three types of tax collection system. First, self-assessment system. Second, official assessment system. Third, withholding assessment system. In order to distinguish the three systems, let us review one by one the meaning of each of these tax collection system. First, self-assessment system. The keyword in here is taxpayer, taxpayers. Why? Because taxpayers are parties who play an active role in calculating, paying, and reporting the amount of the tax to the tax service offices or through by online administrations that have been created by the government. An example is the types of VAT and PPH taxes. Second, official assessment system. In the official assessment tax collection systems, taxpayers are passive, and the tax payable only exists after the issuance of a tax assessment letter by the tax authorities. This tax collection system can be applied to the settlement of land and building, which called in Indonesia is pajak bumi bangunan or PBB, or other types of local taxes. Third, withholding system. In the withholding system, the amount of the tax is calculated by a third party who is not taxpayer and is not a tax officer or tax authority. An example of a withholding system is a deduction of employee income by the treasurer of the relevant agency. So, employees no longer need to go to the KUP to pay the tax. So, that's all from me. Now we're gonna learn about the type of tax. There we go!
Hello everyone, my name is Dewi Citelumban Tobing, and in this part I'm gonna present and explain about types of taxes. According to Siti Resmi, we can divide tax into three groups. The first group is taxes according to the class. In this group, there are direct tax and indirect tax. Direct tax is a tax that must be borne by the taxpayer and cannot be delegated or charged to another person or another party. This tax must be borne by the taxpayer concerned. Example of direct tax is income tax. The second one is indirect tax. Indirect tax is a tax that can ultimately be charged or delegated to people, other parties, or third parties. This tax occurs if there is an activity, event, or actions that cause taxes to be payable. For example, when we deliver goods or services. Example of indirect tax is VAT or value-added tax. The second group of taxes is taxes according to nature. In this group, there are also two types of taxes. The first one is subjective tax. Subjective tax is a tax that takes into account the personal condition of the taxpayer, in the sense of paying attention to the condition of the taxpayer. Example of subjective tax is income tax. Another one is objective tax. Objective tax is a tax that pays attention to the object, whether in the form of object, circumstance, action, or events that lead to the emergence of obligation to pay taxes, regardless of personal circumstance of the taxpayer. Example of objective tax is VAT or value-added tax, sales tax on luxury goods, and land tax and building. The last group of taxes is taxes according to the collector. In this group also divided into two categories. The first one is central tax, and the second one is regional tax. Central tax is a tax that collected by the government and used to finance state household. For example, is income tax, VAT or value-added tax, and tax sales of luxury goods. There are also regional tax in this group. So regional tax is a tax that collected by the regional government and used to finance regional household. The regional tax consists of provincial tax and regency or city tax. Example of provincial tax is motor vehicle tax and tax motor vehicle fuel. And then example of regency or city tax is hotel tax, restaurant, and entertainment tax.